Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for July 6th, 2015. The Greek crisis is in full blast. The Greek polls gave a resounding no towards accepting the bailout terms by the ECB and the EU. And at this point in time, the markets are down slightly, I should say. We were down quite a bit right after the vote. That was obvious. And so now I'm going to try to show everyone some possible scenarios of what might be going on as we go into the week. Keep in mind that this is a ultimate. What you're seeing in front of you is macro global economic game theory in action. And what is obvious is never obvious. People might think that the no vote was a resounding, it would be a very negative factor in for the global stock markets. However, I can assure you, from based on my experiences over dealing with many, many crises over the past couple of years, over the last 10 or 15 years, that that all of these at one point or another get resolved. They never get fixed, but there's always some sort of patchwork resolution that allows the market to do what they initially wanted to do, i.e. the primary trend of the market does manifest itself, and I believe that is the case this time also. However, be prepared for intense volatility, choppiness, but then that's nothing new given the fact that we've been dealing with that anyways. Now, also keep in mind that the Greek crisis is not something unexpected. It is not that the yes vote was a guaranteed outcome, and the fact remains that the no vote was still a possibility, which obviously trumped by, as the Greek people voted towards sided with the current government in their views. Saying all that, there are intense negotiations going on, as we all know, and 99% of what's being talked about and what needs to be done in order to keep Greek banks, specifically and the Greek economy solvent, is not something that you and I will be privy to. These are things that will be talked about behind closed doors and hammered out. And I can assure you that the Germans specifically and the Eurozone generally are not in the business of destroying themselves by causing a Greek exit. So let's get straight to the charts here. Try to show you a couple of things, make this productive. Number one, this is the October 15th low. Let me just do this right. October 15, 2014 low, which was a pivotal low for the markets, as I've shown many, many times. And that's the point of reference that I'm going to be using, at least at this juncture. So draw the uptrend line, and I choose to draw it like this, based on a nice double bottom here that we saw back in June 16th and June 15th. We're all aware of that. I'm going to draw another line here to give a second scenario right there. And just leave it there. Okay, so where are we right now? I've talked about repeatedly and a lot, and every single one of my advanced coaching session members know very well that I've shown these exact parameters, exact levels of retracement, and it's pretty much what's going on. I mean, these are not very difficult to see. They're quite easy. I'm showing you the live E-minis right now as we're seeing here, and the live E-minis right now behind us are down 13.5 points to 2055. As I've always said, if you want to see a rough representation of what the S&P is on that, you add like 7 points or so. So you're looking about 2062 or so that we are on the S&P right now. So what we have here is the Darvas box, the green line here for the upper band, the red line here for the lower band, and we came to the bottom of the Darvas box. And if you look at the S&P, and I've talked about this extensively in all my coaching sessions, is you can draw this is a strong level of support. And of course, we have a lower level of support here at 1960. Now, keep in mind that getting to 1960 is not something. One second. Getting down here is not something, in my opinion, that's going to occur right away. And what am I doing? All right, let's see if I can do this right. All right, so let me get these lines up a little bit so everyone can see it. There you go. Okay, so these are all support levels that we are dealing with right now. Okay, good. So here we are. We came and almost touched the bottom of this level last night at 6 p.m. when futures started trading, and after the Greek vote, and I should say Greek no vote, and we bounced off. You can see that clearly in the form of this green candle that we're seeing here. Stochastically, this is a daily chart here. We did get oversold. We did get oversold back on the 29th. And what we're seeing right now is, despite a lower price, the stochastics did not come down and test the maximum oversold conditions that were generated as you can see here, on the 29th of June. So what is that? That's called a positive divergence. That's a slight positive divergence. Keep in mind that the US markets eventually will sing their own tune. The Greek economy and what's happening out there is not, in my opinion, going to completely derail the global growth picture that has been unfolding in front of us, especially the U.S. recovery in the form of very strong housing demand, in the form of reasonably strong manufacturing, construction numbers, and such. As we can see here, that the rebound in the second quarter from the first quarter weakness in the U.S. economy is very much in progress, and I believe that will trump whatever is happening out there in Greece. Whichever the case, this is a danger to the global economic system, but that again is something that that's going to rattle markets a bit. But I do not believe that the Greek's loan is going to push us or the global economy into a recession. So, saying all that, here's the first level of support. What we have here, and I'm going to try to get the drawing tools. Freehand. Okay. What I've shown all the session members very clearly, all the coaching session members, and I'm going to show it to all of you who haven't taken the sessions. Highly recommend that you do. Is that you have a confirmed head and shoulders. You have a head here, you have a left shoulder, and you have a right shoulder. Okay, and what that simply means is that this market might have topped for the time being, and in my opinion, probably has. We're still making money in between this trading range, and I think there's a good deal of money to be made through this volatility that we're seeing. So saying all that, the possible scenario is that we move from here, we test the bottom end of this uptrend line, broken uptrend line, and then then a sharp move up towards, and again, these things don't happen in a straight line, but you never know. And then you move up towards the 24 and the 34 and the 50-day moving average. That's this line right here. As you can see, these are curving down, which in itself is a negative sign. Okay, so you're starting to right there. You see that, and that could be it. And that, in my opinion, could cause another sell-off, which brings it down towards, again, testing this support again. And we could very well be trading in this trading range that we're looking at, similar to what happened since the beginning of the year. So don't be surprised with that. Now, if this level breaks, which is around 2025 or 20, let's call it like 2032 or so on the S&P 500, you can see that this red line here, then obviously you're going to come down and test this range. Okay, this range here, right there. So it's pretty much given. Now, is it that simple to manage these type of volatility? Absolutely not. You have to keep your position sizes small. You have to play selectively. You have to do all the stuff that we do every single day. So this range would be the lower end of the range. So I'll call it lower range 1. And what we are here is this range now, which is LR2. Okay, so that's really what's going on. So we'll be keeping a very close eye on that. And as I keep on posting my charts, I want all of you to keep in mind that this is a extremely volatile market. And again, expect very sharp moves up, given the fact that we have seen a large move down from the right shoulder since the beginning, since the middle of June. So you have this here right now. So my opinion is that we could very well bounce here, fail at the 34 and the 50, or possibly overshoot and test the right shoulder again at this level. If we take out the head, then obviously we're going to go a lot higher. I'm not really betting on that from a forecasting standpoint. I think this stays in place for highs, and then we'll be monitoring the rejection or breakout at the 34 and the 50, and keep ready for this range to continue, just the way it continued here. So all right, so that covers the S&P portion of the picture. Let's take a quick look at the Russell 2000, which come on. Let's look at the Russell 2000 here, and I'm not sure why I can't get out of this. Exit. Okay, that's a Crexit. That's a chart exit, right? Okay, sorry about that. So here we are. The Russell 2000 a little bit more defined to me, and I'm going to place my bets on the long side on this more than the S&P 500, which is a lot more banks and multinationals that are obviously exposed to the Greek economy, and I'm sorry, to the Europeans and the global economy. So this is the U.S. small cap infantry, as I like to call it. It's pretty clear here what's going on. We're bouncing off a defined lower level here on the Darvis. We do have a level here, possibly 1208 on any slippage. I like what I see here on the stochastics. This is very defined to me. And again, stochastics that get this oversold every single time they've bounced, right? So the bottom line is, looking at it from a technical standpoint and keeping emotions aside, I think there's a good deal of money to be made on. Look at the stochastics, deep oversold here, right? What happened last time? Look at this, fantastic buying opportunity. Right now, a similar thing is taking place, and I believe that we can move up towards the 1271 level, which again would be a back test of this rising channel, and we could possibly get rejected there. But right there, you got 50 points. You're talking about 1,000 to 1,500% on your money if somebody can swing it and manage their trades right on the Russell calls. Okay. At this point, a slippage would bring us down to the 1200 range. We'll see if that happens. We don't know, but I think this is a sector, the U.S. small cap sector, which will benefit most from strong U.S. growth and the numbers that we've been seeing lately. So I would focus on this and try to maximize my profits. Remember, selectivity is key, and just because markets go up or go down doesn't mean everything's going up or down. So I like the way this TF with the futures on the Russell are shaping up, and giving you a quick closer view here before time runs out. We've got 30 more seconds. You can clearly see here what's going on. We've got strong Darvis base here. This is all within from last night. Okay, 1223. It's already moved up 14 points from the lows. Right now we are down about 7 points in the TF, and S&P futures are down about 13. So this I'm liking a lot. Okay. I'll be doing more of the I'll be doing the video cast on a regular basis like before, and